Hi, I'm Christine Dahl. I'm a lawyer living in The Hague, and I help Americans and other people outside the United States to understand their US income tax obligations and foreign bank account reporting requirements. I've been practicing law for 29 years, and I have a practice here in The Hague where I help clients understand these obligations and fill out their tax returns, and particularly to understand the recent changes in the Foreign Account Tax Compliance Act and the foreign bank account reporting requirements. I wanted to create this presentation to help people understand what their obligations are and figure out whether they need to consult with a tax professional. I'm not giving legal advice in this presentation. I want to give you basic educational information. And I recommend that you consult with a qualified tax professional to find out how the laws apply to you. So I am a former prosecutor and experienced criminal defense lawyer, and I have been getting a lot of questions from my clients concerning whether they have to file a tax return if they're living outside the United States. And I've noticed that there are some common misunderstandings about the obligations for expat Americans when they are living and working outside the country. The problem is that people don't know what to do, and the penalties for failing to file the necessary forms are very, very high, and the rules of the game are changing. There are now going into effect many bilateral agreements between the United States and other countries where banks and foreign financial institutions will be giving information to the United States about their U.S. Account holders. You may, like me, have gotten a letter from your bank that you were identified as a U.S. person, and the bank requests your permission to disclose your personal information to the United States, and then asks you to fill out the forms from the United States. And if you don't comply, for instance, the letter I received said that they would tell the Dutch tax authorities that I was refusing to comply. Needless to say, I thought it was prudent to comply with this request, and I file my tax returns and my foreign bank account reports every year as an expat American, so I don't have any concern about this kind of disclosure. I will say it did feel a little intrusive, but what I try to bring to my clients is confidence that they're doing the right thing and a feeling of security that their assets are protected and that they're not going to be subjected to high penalties or surprises. So the first point I want to cover is who has to file. A question I got this week from a businessman who does work in the United States was about whether he needed to be in the United States for any period of time before he needed to file a tax return. And for people outside the United States going into the US, there's no threshold or time limit for the number of days where you're earning income in the US before you need to file a tax return. In the same way, even if you're outside the United States for a short period of time, or even a long period of time, you still need to file tax returns if your income exceeds the threshold for filing. Now that varies based on individual circumstances, but in principle, if you're single and you're earning more than $10,000 a year in income, you need to file a tax return. A common mistake is that people think because they don't earn above the foreign earned income exclusion threshold, they don't need to file. But in fact, the foreign earned income exclusion is an election that the taxpayer needs to make when filing the return. It's not automatic. The U.S. stands alone, except for one other country, Eritrea, in taxing its citizens even when they live outside the United States. So the government looks at the worldwide income, even when you permanently live outside the United States. Or, for instance, a lot of people have never lived in the United States. They were born abroad to U.S. parents and have citizenship, but didn't know that they needed to file a tax return. So, in brief, people who don't know or don't understand the law can become compliant and cure their delinquencies by using the IRS's voluntary compliance programs. Now, it's very important before you choose one of these programs to make sure that you talk to a lawyer or accountant and confirm what the requirements are. These programs can change at any time. And with the advent of FATCA, where banks are disclosing account holder information, it is likely that we will see the sunset of these voluntary compliance programs. For instance, the streamlined program where there are no penalties for catching up based on not filing a return or not paying your tax. Once the IRS learns of a foreign account and a foreign U.S. account holder who has not filed tax returns, I think that that's going to attract interest, attract scrutiny by the IRS. And once the IRS sends a letter to the taxpayer inquiring about the delinquency, they're not going to qualify for the streamlined program. So it's important, if you think that you're not up to date, to take advantage of this window of opportunity and get your back tax returns prepared and filed, as well as your foreign reports of foreign bank accounts. So to participate in the streamlined program, you will need to prepare the returns for the past 3 years that are already delinquent. So you're not out of time yet for 2014 because when I'm recording this on May 20, and you have until June 15th to file that 2014 return. So looking at the calendar, you'll need to go back to 2011 and file 11, 12, and 13. And you need to file the foreign bank account reports for the past 6 years. A common question I get about the foreign bank account reports is, how do I know when I have to file it? When I first learned of this reporting requirement, which is separate from what the IRS requires in terms of tax returns, I thought that it was $10,000 per account, and that was wrong. What the threshold for filing this report is the total at any time during the year of all your foreign accounts. So if you have a savings account and then a current account or a checking account, so to speak, and maybe you have other kinds of financial instruments that qualify for the report, and the total value, even for just one day, exceeds $10,000, then you have to report all the foreign accounts, not just the ones that have value over $10,000 themselves. Another interesting question I got from a client was whether he needed to report an account from his wife where she held the money for him. And of course, if you have control over an account in somebody else's name or a financial interest in that money, you're still required to file a foreign bank account report there as well. So the foreign bank accounts are not only cash accounts, they can also include a pension account or a mortgage investment account, which is quite common here in the Netherlands. And you need to find the highest value. That can be something that is difficult to do where the bank records that you have show perhaps the opening balance in the beginning of the year and the closing balance and the interest earned. So at that point, you want to be able to say in good faith what your estimate is, or simply indicate that the value is unknown and err on the side of disclosure. So if you think you're close to having to report it, go ahead and report it. You can also look at the opening closing balances on the monthly statements and then take the highest balance there. If you are new to filing a tax return as an expat American, you may want to consult a tax professional to help you with your first year's report. And this is because there are some special provisions for handling foreign tax credits, as well as deductions that might be associated with your foreign housing. And it's helpful in advance of your filing obligation to keep good records throughout the year to make filing your return easier. Well, I hope this has been a helpful overview of the obligations that you might have as a US citizen or what's called a green card holder or a permanent resident. And if you have questions, I'm available to consult with you. When you're looking at taking care of your tax returns, you may think about the differences between consulting with an accountant versus talking with a tax lawyer. One advantage that a tax lawyer might have is the attorney-client privilege, which accountants don't have. So for example, if the IRS asked me what I talk about with my clients, I would say that that is privileged and they cannot look at my records or my notes of conversations or even get into what advice I've given somebody about complying with their tax obligations. So keep that in mind when you're assessing what you need to do to become compliant and take advantage of the voluntary compliance programs that might help you to reduce any kinds of penalties and avoid problems with the Department of Justice or with the IRS. I look forward to talking with you and answering your questions, and I wish you a wonderful afternoon. Bye-bye.